What's up, everyone? It's been a while since my last video on the market, and with the first half of 2022 in the books, I thought it'd be a good time to give an update. Especially right now, when you're starting to hear headlines go around about a shifting market, as well as that all too scary R word, meaning recession, now more than ever it's important to know what's going on. So in this video, I'm going to be covering 3 factors that I think are easy for anyone to track and are going to be good indicators of where the market may be headed. And I'm calling those 3 things the big 3 I's, which stand for inflation, interest rates, and inventory levels. Starting out with inflation, it's honestly a topic that not many people have been talking about for the last 30 years, but now I'm pretty sure everyone's been hearing about it nonstop in the media. And inflation really stands for how much it costs for goods and services to be purchased by the everyday consumer. Meaning, if inflation is up, those goods and services are costing consumers more, and if it's down, vice versa. Now, I think that inflation is a topic that has been somewhat politicized lately, but in my opinion, there's 2 big driving factors for why inflation has been going up this year and the past year. The first of which is the government spending way too much money, and the second being the supply chain disruptions that have happened over the past 3 years that are causing it to be more difficult to actually exchange goods and services. To give some context to that, the US inflation rate in June of 2022 rose to 9.1%, which is the highest it's been since November of 1981. And long story short, that's not good for all of us consumers out here. Some of the biggest driving factors for inflation have been things like energy prices, which are up over 41.6%, food prices, which are up over 10.4%, and even housing prices have shown an increase of 6 to 17% depending on where you are in the country. Historically, housing has actually been a pretty good hedge against inflation, so if you're in the school of thought that you think inflation is here to stay, or at least going to be here for the middle term solution, that's something to consider for your housing decisions moving forward. The second big I wanted to cover today is interest rates. Now, 2022 has shown a shift in that as well, where we've changed from the storyline of hearing interest rates are at historical lows to now, starting out in 2022, we saw a pretty sharp increase in interest rates, and now we're starting to see a steadying but continued trend up in interest rates. So at the time of this recording, interest rates are sitting around 5.5 to 5.75% for a conventional 30-year mortgage, which is up from previously in the year. So what does that mean for you as the consumer? Well, first of all, that same house you would have purchased is now going to cost you slightly more for your average mortgage payment. And second of all, what does that mean for it continuing forward? Well, if it continues to trend this direction, that means it's only going to continue to be more costly for you to purchase a house into the future. So as you're making your buying decision, that's something you're going to want to keep in mind. What I'm telling a lot of my clients is, now more than ever, it's important for you to really understand your budget as well as work with a qualified lender to be able to tell you what exactly you can expect with your mortgage and working around that to make decisions around the buying process. And again, if you think interest rates are going to continue the direction they're going, it might be something to factor in terms of the timeline of whether you want to purchase now and kind of lock in where we're at, or wait to see where they go and potentially lose out on some additional buying power. The last thing I wanted to cover today, and the third big I, is inventory levels. Low inventory has been a problem for the past 2+ years and is something that I think has been one of the biggest driving factors for why the market has been in the condition it is. In the past 2 springs, we've had this combination of super low interest rates and super low inventory levels, which really created this frenzy we saw where buyer demand was at an all-time high and there just wasn't enough homes to purchase. As we're starting to see the market somewhat shift, that's starting to change dynamics out there, but we still continue to have a somewhat persisting level of low inventory levels. So this really means if we're going to start to see a shift in this third category, which hasn't been quite as drastic as the last 2 of inflation and interest levels, that would be the biggest factor that would drive a complete shift in the market. But as of right now, I don't think we're headed that way because inventory levels are still low. What I'm tracking right now is inventory levels being at about 1.3 to 1.5 months worth of inventory levels, which may not mean much to you, but to give you some context, comparatively to February of 2022, when we had 0.41% of inventory levels, we've started to see more inventory actually out there. That means you're having more houses to choose from, and they're actually sitting on the market a little longer. In this video, I'm really covering a lot of the large ticket headlines that are affecting things at a national level, but I'm going to be doing a follow-up deep dive into more of a local market metrics you can track to see how you could really be understanding what's happening in your market, and that's going to really impact buyer strategy moving forward. The other big factor to consider with inventory levels is seasonality. Like everything else, there's always times where you have peak inventory and lower inventory. So with the combination of a shifting market and traditional annual seasonality, we're going to have to really be able to differentiate. Are we seeing inventory levels increasing because the market as a whole is doing that? Or is that more just in line with what happens naturally every year? And this is something that, again, factoring in with the other two is really going to be a big driver of where the market goes and where buyers and sellers are going to be sitting when they have their houses on the market. Now, there's obviously a lot of factors that go into the real estate market as well as the economy as a whole, but I think if you get a basic understanding of these three metrics and you can start to track them over time, it would be really helpful for you to understand, is it a good time to buy? Do you think it's going to be a better time to buy in the future? Or is it going to trend worse and you might want to jump into the market a little earlier? I hope you found this video helpful, and I'm really going to be focusing on, in the next few weeks and months, putting out more and more content around the market as a whole and really help buyers understand, now that we're not in this same market we were, what's happening and where can we be expected to go into the future. So, thanks so much for watching, and until the next video.